So traders, the whole picture is becoming very, very clear about the stock market having another big dip on the downside. US just got downgraded. We're going to be looking at the S&P 500. The last 3 times the US got downgraded. I'm also going to be showing you the fear and greed index, because the fear and greed index is actually telling us to be very cautious because we're starting to become very greedy right now. I'm going to be going through a post that Adam Kujas put up about the US downgrade and about what actually happens with the charts. I'm going to talk to you about why Tudor Jones is saying the stock market's going to make a new low, but also out of all of this coming together, the actual charts is actually telling us that we're about to see a very big drop on the downside. So everything is lining up for a big drop on the downside for the actual stock market, but don't be alarmed. Get ready for an amazing buying opportunity. I'm going to show you the reasons why, so you can set yourself up for what's happening right now and get ready for an amazing year moving forward. So that's what I want to cover with you guys in today's video. So traders, don't place a trade based on what you're seeing in today's video, guys. I don't know definitely what's going to happen, but I'm just using my same analysis that you guys are using right now to try to understand what's going on with these markets, okay? Also, traders, I'm giving you a free membership access to my trading course. You can actually see it on the screen there, or then that first link in the description there, guys. Go get free membership access to that. There's like 8 videos there. There's just so much in there, guys. You're going to absolutely love it. Now, let's actually do this here. I want to start off with the Tudor Jones interview that he actually did. Listen to Tudor Jones here.
A lot of folks who watch you and they want to know what you think about these markets. They want to know what you think about tariffs. They want to know about what you think about what's going to happen over the next 12 months.
Right.
Where are we?
For me, it's pretty clear. You have Trump, who's locked in on tariffs. You have the Fed, who's locked in on not cutting rates. That's not good for the stock market. We'll probably go down to new lows until even when Trump dials back China to 50%.
And that's what you're expecting?
Oh, I'm sure he'll dial it back to 50 at some time. I mean, I think that's kind of in the market right now. So he'll dial it back to 50 or 40, whatever. Even when he does that, you got those tariffs, the equivalent of a 2%. It'd be the largest, they're a tax. It's like the largest tax increase since the 60s. So you can kind of take 2 to 3% off growth. And then you got the Fed, who's, unless they got really dovish and really, really cut, you're probably going to new lows. And then when we're in new lows, the hard data will start to follow, and it'll probably create the Fed to move, create Trump to move, and then we'll get some kind of rally.
Is there an optimism?
Now, look what he said just there, right? It's amazing. Everything is lining up. This is just incredible, right? So Tudor Jones came out this, and he did this, about a few weeks ago now. And he said that we're probably going to get a drop in the markets here. Probably going to get a drop in this the stock market here. And we're probably going to go to new lows. And then we're going to get a big rally out of it from there. Which is quite interesting to see that. Listen to this.
Do you see a rainbow at the other side of this policy on tariffs?
Well, can I just say, correcting the trade imbalance was a great idea.
Okay, so he's talking about the trade imbalance. So the reason why I wanted to share this with you here, because it's really interesting about see how everything's coming together, right? So Tudor Jones actually said this about the actual tariffs here, about the market making a new low. Now, I don't know about the market making a new low. So this is the stock market here. This is obviously the S&P 500. I don't know about the actual market, this stock market here making an absolute new low. That would be a pretty big drop in the markets, right? What would that be? Another 20% drop in the markets. Maybe we're not going to get that much of a drop in the markets, but what Tudor Jones is saying is we're probably going to get a bit of a dip, right? Because of the tariffs coming in the market. So that's the first thing that's lining up here. Now, the next thing I want to say here is I'll go to this one here, is that the US just got downgraded, right? So here's the thing that I just put into ChatGPT-4 to do some research. And it says, below is a conscious summary of the S&P 500 immediate reactions after each of the 3 cited sovereign credit ratings downgraded of the United States. I used the official close of the trading day just one day before and downgraded the announcements to the lowest close with the following 4 weeks. To capture the short-term downgrade shock, the window is the one most market strategists use. So you can see here, right? So the purpose of this thing here is to show you this here. And this is where it gets so awesome, right? So Tudor Jones, so the market's going to go down. ChatGPT-4, right? This is what it's saying here, that with the S&P 500, you got these 3 different S&P 500 2011, Fitch, which was 2023, Moody's Outlook, November 2023. Each of these times, we actually had a bit of a drop to the downside. Now, it's actually saying Moody's did not downgrade this one here. et cetera, et cetera. But here's what the numbers actually show from here, right? Look at this here. This is where it gets so cool. So here's what the numbers show. The market initial pullback has been remarkably similar, right? Roughly 5 to 7%. So this is saying 5 to 7% after each headline cut. So if the US did get downgraded just recently, right? In all cases, equities bottomed within 3 weeks. So in the next, so I would expect out of this here, one, Paul Tudor Jones how the market's going to go down. Secondly, we're seeing that the US getting downgraded. We can see equities bottom within the next 3 to 4 weeks. So as the market's coming down, don't freak out, right? Don't freak out. Get ready for an amazing buying opportunity. Look for good buying opportunities, right? There's so much opportunities out here. Then begin to recover as investors refocused on the macro Fed policy rather than the action itself. The absolute point drop naturally grows to the indexes, but the percentages. So whenever someone says every time the USA is downgraded, the market crashes, the historical record shows a sharp but not catastrophic single-digit correction that tends to retrace the following months. Now, Adam Koo also just put out a thing here just recently as well too, which was pretty awesome. So thank you, Adam Koo, for putting this out here. He actually did a bit of research here as well too. He said on Friday, May the 6th, after the initial close, Moody's announced that they have downgraded US debt credit rating from AA to AA-1. Will the US stock market crash again? His previous 2 instances, he says that in August 2011, market dropped 10%. Right, ChatGPT said single digits, but that's still okay. In 41 trading days. 12 months later, the S&P rose 36%, right? August 23, dropped by 10%, and then 58 trading days, 37%. If the S&P drops another 10% this round, so a 10% drop here, if the market does drop 10%, that's where, like, with Paul Tudor Jones saying that, the market's going to hit a new low, right? ChatGPT says single digits. Adam Koo says 10%. Let's just say the market does drop another 10% here, right? And I'm going to get to the charts in just a minute, but it's amazing, guys, because the charts are telling us that the charts have been telling me anyway that we're getting ready for a drop, and it's interesting to see all this coming out. So if we did get a bit of a drop in the markets, right? If we did actually start to get a bit of a drop in the markets, this is what we'd actually see coming down through to here. So let's actually do this here right now. So the drop would be from here down to around about here, which is quite interesting, right? All that is just a 50 to 60% drop. If the down market does drop 10%, all it is just a 50% correction, right? Maybe even get a bit lower from there. We can actually get a move down towards this point down through to here. So about a 50 to 60% drop out of the actual market from there is probably what we can expect there, right? Then a big rebound, right? Then a big rebound, as Adam Koo says, we can see these things fall, within 12 months later. So get ready, guys, because I believe this could be another initial little shock from here. We can see here that this is the chart here. What happened in August 2015? August 5th, 2011. August 1st, 2023. We can see what's happening through there. Now, on top of all of this, we can actually see that I actually put up a post literally just 21 hours ago saying this fear and greed index. And I said, and the fear and greed index is talking about this level from here. As you can see, we're actually getting this point from here. And one of the things I was saying here about this here is it's really interesting to look at the fear and greed index, is that when fear peaks, opportunity knocks. Most traders get it backwards. They buy when they feel safe, which is like right now, right? They're feeling safe, let's actually go in, and sell when it feels scary. As you can see here, the time was buy a month ago, right? And that's exactly how when they lose money. The smart investors do the opposite. Max fear equals buying opportunity. You guys probably see that there, right? Now, the good thing about what this here is, if you didn't buy a month ago, you're probably going to get another opportunity real soon, right? Rising greed is caution. So right now, the fear and greed index is here right now. Don't follow the herd. Train your mind to see the fear signals, not as warnings. See the fear as a signal, not as a warning. Discipline and emotion, that's how the pros win. And as you can see from there. So we're seeing that all through. So the overall big thing that we're getting right now when it comes to the overall markets is, and by looking at what's happening right now and just looking at all this research and actually looking at the stock market. Now, the one big thing I've been saying about the actual stock market itself and looking at all the indices is I've been talking about how, firstly, and this is one thing I've been saying when it comes to the actual stock market itself, is that if we understand two simple things about the markets: one, how markets work, and two, using moving averages as a momentum indicator. And what does that simply mean? And that simply means this, right? That simply means this, that how markets work, and let me take that off the screen. Do that again. All right. So how markets work is, how do markets actually work, right? They go through stair steps. They go through a wave up and then they pull back, and they go through a wave up and they pull back, and they go through a wave up and they pull back, right? So that's firstly how the markets actually work. And so I've been calling for a bit of a drop in the markets coming right soon, because we've just had what? We just had that there. So the market's telling us, if we just look at the chart's saying, okay, we've gone up for a while. There's actually there's actually a high probability we're actually going to go through one of these here. Right? Which, by the way, isn't it a quinky dink that now we're getting the fear and greed index at greed, all this sort of stuff's coming out, then they start to downgrade here, and now we're probably going to start to get something like this through here, coming down from here. So it's interesting to see that we're getting that now, which is going to cause a pullback. But the charts are telling us that we're probably going to get a bit of a pullback, a bit of a drop soon out of the markets, because guess what? That's what markets do, right? They don't just go straight up. And if they do go straight up, if they do go straight up like that, we're going to get that, right? Look at this here: up, down, up, down, up, down, up, down, right? So you get that. So the first thing through there. Second thing I do say is about when it comes to the momentum of the market. I use my 52 moving average on my daily charts, and I also like to use my moving average. This is my 24 moving average on my weekly charts. And whenever the moving average is pointing down, right? Moving down, right? Whenever we are pointing down, as you can see through here, look at this here. Whenever the moving average goes from strong to rolling over, oh, that's a danger territory. Look what's happening here, right? So I've been warning about this level through here, but then also my 52 moving average on my daily charts, look at this here, it's coming straight down. And when you start to align that up, right? When you start to align, firstly, how markets work, which is strong up, we're going to get a pullback here, because that's what markets do. This is how markets understand, right? This is why buying down here was the opportunity, not up here. By the way, guys, it's really interesting to see that pullback of, say, 10%, as I said before. You know, if we do get, say, Adam Koo says 10%, ChatGPT says single digit, you know, it could be, say it's a much bigger one. Say we do get a 10 to 20% drop. That's only a 50% correction. And then we pause, and then guess what? Then the slingshot move comes. So get ready, guys, get ready. Guess what's going to happen, right? And the most important thing is what? Guess if we do get that, if we do start to see this guy through here, guess what the fear and greed index is going to be saying right here? The same thing, right? And then guess what's going to come out of the markets? The recession talks, that's it, it's all over. But not you. You are armed. You are ready, right? So over the next 4 weeks, you are waiting for this. You're seeing this. You know what's going to come out through here, right? The same thing. That's it. The market's topped. The market's going to go into recession. And then the fear and greed index is going to be pinging at fear again. And you'll be like, "Ooh, I learnt my lesson last time. Let's get going again." And then bam, you get to go again, and when you start to buy call options and all that sort of stuff, it starts to become really good, right? And so if you can see here, guys, and look at this here. So and one of the things that I've been talking about here really, really, really big time is this. Every time we've been getting the moving average coming down, most of the time, if we get something through what we're seeing right now, right? If we get this and what we see right now in the markets, most of the time, if we do get a rally, so moving average trending down, market rally, we get pushed back down. Moving average trending down, the market rally, push back down. You see it through there. So moving average is trending down, come back up. The momentum is going to drag this down, right? I even did a video a few days ago saying momentum will drag this market down, right? And so we can see that through there when it comes down to what's happening with these markets from here and what's going on from here. You can see this from a perspective, and this is the S&P 500, and it's really, again, guys, the truth are always in the charts, right? I hope you can see here that I didn't know any of this fundamental stuff that's coming out. I've just been reading about it on the weekend, and I'm presenting it to you guys right now about everything, right? And just to quickly recap, ChatGPT says this about that. The fear and greed index is actually telling us to be very cautious right now. And I just put that out, and then I just found out about the downgrade. Adam Q talks about what's going to happen about the downgrade. Poor Tudor Jones says the market's going to go down from here. But the charts are telling us, which is one, how the markets work, two, about the moving average, which is momentum. Momentum's probably going to drag it down. It's all lining up to see what's probably going to come out of these markets from here. And then we look at the Nasdaq as well too. Nasdaq is doing the exact same thing, right? Again, it's just, something's just not quite right. And look at this vertical move up, right? This is... And by the way, look at this gap here. So everything's lining up. Everything is lining up for this market to have a drop here, right? Now, I don't expect Paul Tudor Jones for the market to be downgraded down here, right? The market to make a new low. But at least a 50% retracement, right? At least a good old 50% retracement. Come down to here, come down and close this gap from here. You know, and then guys, once that happens, guess what? Look what the moving average is starting to do already from here. What does that mean? I want to share with you here, right? So firstly, we know, again, how do markets work, right? We know they go up for a while. We're starting to get a lot of greed up here now. So guess what's going to come? We're going to get the pullback, right? Because why? That's what markets do, right? They test it. And all this is going to come down to here. It's probably going to come down to here. Now, the reason why that's important is, guess what? As this starts to happen, yes, the moving average is trending down, but we're starting to do that, right? So as this market comes down, we're probably going to start to do something like this with the moving average and start to do that. Then the market does something like that. And then towards the end of this year, get ready for an explosion move to the upside. And probably even into next year as well too, looking at the data from that through there. This is the Dow Jones as well too from here. So this is the reason why I'm really excited, guys, because firstly, you can see just by understanding these markets, like again, just see how these markets work, right? They go up and then they go down. They go up and they go down. They go up and they go down, right? And they go through these whipsaws, right? And they go up and they go down. And so we're getting it anyway. We're probably going to see it anyway. Moving average is trending down. We're probably going to get a 50% trace. But all this is going to be to me, if I just look at this from a real big picture, right? And I'll even look at the actual Dow Jones. If I squeeze this right up and look at the absolute real big picture here, all this to me is just the market coming down through to here to create a low, a significant higher low, up, down, and it'll be more like a up and then down, and then we get another, then we start to get a bit of a slingshot. And all this here is creating just what's called a significant higher low in the markets. And if we start to get something like this, guys, over the next few months, and we start to break these previous highs up here, where we start to get this turning action from here, guys, get ready for an incredible move to the upside. So there we go, traders. Hope you really enjoyed this session. Traders, if you do need more hand-holding coaching for looking for good trading opportunities, know what to look for, and you want to join a small group of private inner circle traders, my inner circle traders, and also have me there coaching you every single week, so you can not only understand this sort of stuff more, but also know how to identify really good trading opportunities. Then that second link in the description there, guys, go click on that. That's an application to my inner circle where I'm actually coaching you. It's a small group of inner circle traders, so you get to communicate with them every day. But I'm also coaching you every single week to make sure that you know how to identify not only just general market knowledge like this, but also how to identify amazing trading opportunities to help you move forward in a big way.